In this video, we are going to walk through how to calculate return on sales. Return on sales calculates the ratio of a company's operating income to its net sales. It measures the amount of profit being generated for each dollar of sales. When interpreting the return on sales ratio, it is better to see an increasing trend. An increasing return on sales ratio indicates the company is efficiently generating profits from its sales. A decreasing return on sales ratio indicates the company is less proficient in turning revenues into profits. This could be a sign of financial trouble. The return on sales ratio is always more useful when it is used for comparison than by itself. The return on sales ratio can be compared to the return on sales for companies within the same industry. A company's return on sales can also be analyzed over time. Generally, it would be desirable to see a return on sales that is increasing or remaining stable over time. The return on sales is calculated by taking operating income and dividing by net sales. Here we have 3 years of net sales and operating income listed for a company. We are going to calculate the return on sales for each year. For the most recent year, we would take the operating income of $157,500 and divide by the net sales of $787,500 to get a return on sales of 0.2 or 20%. That means for every dollar of sales revenue, the company generated a 20-cent profit. For 1 year earlier, the return on sales ratio is 0.15, which is the operating income of $97,575 divided by net sales of $650,500. For the earliest year, the return on sales is 0.12 or 12%, which is calculated by dividing the operating income of $66,000 by the net sales of $550,000. Return on sales has steadily increased from 0.12 or 12% in the earliest year to 0.2 or 20% by the most recent year. That's it. We are done. This video was created by Dr. Jennifer Canis and narrated by Dr. Wendy Tietz and is part of the Accounting Skill Builder video series. See accountingisanalytics.com for additional faculty and student resources.